Hello, what's up traders? It's Ivan here. Have you ever been stopped out too early and then the trend just continues? Have you ever been confused of where you should put your stop loss? Are you aware that you should vary your stop loss depending on which market conditions you're trading in? I don't know who taught you the stop loss secrets, but let's be clear. What I'm going to talk about in this video is my stop loss strategy, what I have been taught by the market through my experience, through frustration, and through failures. I get contacted by traders from time to time that says that, where do I put my stop loss? How do I prevent being stopped out? I'm confused where I should put my stop losses. Let's set some premises for this video. First of all, what I want to talk about is my experience and how I have developed my strategy through failures. Secondly, I only use 1% of my account per order maximally, nothing else. It also needs you to actively move your stop loss once trades goes in favor. I then use 1 hour time frame to look for trades. Thirdly, I don't know what else would other people on YouTube or in the community or books or whatever have been teaching you. I can only tell you my experience. So, with that being said, you should also cast your votes by hitting the like button. Let me ask you a question. How much do you risk per trade? Where do you enter? That has significantly correlation to where you should put your stop loss. Thirdly, can you let your next trade go to stop loss without feeling any negative emotions? You shouldn't risk a lot per trade. Your trade should be at support in an uptrend. Your trade should be at resistance in a downtrend. It should also be very easy to wait the trade out. Did you get profit? Did you not get profit? Once you have made a decision to trade, it's all said and done. Leave it, let it go. Whatever your guru or YouTube has told you about stop losses, I don't know where the sources are, but what I can tell you for free is that actually it might be wrong, because for those who comes to me, they seem to have been taught the wrong things. Someone told them in the beginning. I hope this video improves your placement of stop losses. I hope it improves your entries and also increases your chances of getting good profits and also understanding the market a bit better. Did you know that banks knows where your stop loss is? Did you know that they know that you only put certain amount of pips as your stop loss and then kicks you out? They call it stop hunt. But you know what it really is? It is actually where you are supposed to have your entries. You are supposed to have entries where the banks have entries. Did you know that banks buy access to their to flows, your flow, so they can see where your stop loss is? Did you know that? I'm not saying you should never use a stop loss again. I'm just saying you should be very smart and also understanding when you are wrong. That's really the basic of stop loss for me. Getting out of trades when you're wrong about the trend, about your entries, something that make you lose more money than you really should not be doing. So when it comes to the market conditions, we have 4 market conditions: uptrend, downtrend, range, and volatile markets. You should be trading in the up and the downtrends, and the ranges you should adjust your stop loss, because if you just put it below the range, that's where market participants know that you will put it, and that's where they will go for it. The last one is volatile markets. You might not want to be in such a trade, but if you are well in the trade, you're all cool. But if you're thinking of entering, you might need to adjust your stop loss and you adjust your lot size. Let's start with the different market conditions. Uptrend. This is an uptrend because we have higher highs and we have higher lows. Now I have 2 different strategies to this: is support and resistance and pivot points. Let's start with the support and resistance. I hope you know support and resistance. This is resistance turning support. I will then enter here and then you have resistance being broken, coming back to support, and now we have resistance coming broken, coming back to support, and I will enter a trade here, here, and here. And then where should I then put my stop losses for this entry? Below previous low. Where would I put the entry here? Below previous low. Where would I put an entry here? Below previous low. For the pivot point theory, I have an entry I want to have between the central pivot and M2. So I would look for entries here, here, and here. Quite good, right? I would put my stop loss below S1, so below here, and below here. Not at any given time was this trades stopped out. This is real trades. I did this this 2020. Then this end of this trend might happen. Now we're going into a different market condition, which is range. First of all, identify when does it become a range. What do you do in a range? Here we have broken below, this candle here has broken below the previous support held up by the market. Okay, first clue, it has a new low. And then for it to be a range, no new higher high. And here we have not a new higher high. Now we have a range. What do you do as a trader in a range? You will then put your stop losses to break even at entry price. Okay, so that goes up there, that goes up there, that one goes up there, and this one might have been a loss. Okay, so we are still having 3 trades, possibly 3 trades, 2 maybe, because you're moving your stop loss at this point. So you still have 2 trades open. And now, what is happening in a range? People are talking about being stop hunted. People are saying, well, it's going to come for you. In this case, it did on a Monday, and I was in this market and I was like, whoa, what happened? So what did I do? What is my literal trading? I was stopped out of this trade, I was stopped out of this trade, and probably also stopped out of this trade. And at break even. And then what do I do here? I now start to look for higher highs and higher lows, and I start buying again here. Because we did not break the previous support that would be a larger time frame support at 1800. So I'm just continuing to buy. And in an uptrend, I'm looking for buys here, didn't get it, cool, doesn't matter, because I will get it next day. I got it here, all good. And so forth, we're just continuing higher and higher. You get the drift? So as we're going higher, I'm adding. As we stop in a range, I stop and protect my capital and protect my entries. And if I get stopped out, I don't care, and I will resume buying when the market now resumes. In a downtrend for support and resistance strategy, basically support and resistance, support and resistance, support and resistance. If I then got an entry here, I would then look to, let's not make it yellow, let's make it orange. I would then look to enter here. I would then look to enter here. I would then look to enter here. I would put my stop loss above previous high, which is here for this trade. And for this trade, I would put it up here. And for this trade, I would put it up here. Now, just look at those, and then I will add my pivot points. And if I was then trading, I would then have an entry. Let's make them black, maybe. I would enter here with the stop loss here. See, better entries, better stop losses. I would then not take this one. I would then take this one. And I would have a stop loss here. Even now, even better entry and better stop loss. And I would have my entry here and my stop loss here. As you can see, better stop losses with my pivot points. So even though we're now in a downtrend, my rules are still the same. In a downtrend, I will enter price at resistance and put the stop loss above previous high. In a downtrend, I will enter at central and I will put my stop losses above this line here, R1. How do you act in a volatile market? If you were to sell this and you sold whatever here, you might have been stopped out at this one. If you were to buy here, you might have been stopped out by this one. So what does that mean? That means that you should have your stop losses wider. You should have your lower or lot size lower, so that when you stopped out here or stopped out here, you don't really feel the pinch. Okay? So, and then also don't want you to trade in volatile markets either, because you're then likely to be stopped out and left by the market anyways. I hope you learned something new today, that the big boys are there to run the market. You just have to play with them. You need to sell at resistance, put your stop loss above previous high or R1 in a downtrend. In a range, we would try to avoid that, because that's where the banks are out for your money and they can just take you out on either both sides of the trade, and you might lose both ways. And also in volatile market, you need lower stop losses, lower lot sizes, larger stop losses. Might not be the place for you, but if you're able to identify when you're wrong, be content with it, and be okay with it, you are on the way to becoming a great professional trader. For me, the best trade is to take loss once you know you're wrong, because your job is to protect your capital, and that's why we use stop losses. So until next time, use stop losses as I would have, and you should becoming a better trader. Boom.